Rise and shine, everyone. A little bit late starting. There's no other reason. I forgot to make my cup of tea. If you never my cup of tea, I can't function. But I'm not exaggerating. I got a letter the other day from India saying if you start cutting down your tea, please don't. We might go broke. So yeah, I'm drinking for India. No, I'm just joking. Clearly, it's I like my tea.
Mr. Rogers, I've got load shedding, so my battery is about to die soon. I'll catch up on YouTube.
I hear you, one DD. We might discuss. It's going to be a quiet training room. It might be a bit of a whinging session on Eskom, but it really is. Yeah, I hear you. I was off from 10 o'clock yesterday till 10 o'clock. Luckily, my inverter held out. Well, I think it did, because I think I nodded off just before 10. But I knew when I woke up again, I left one of the lights on. It came on, so it must have come on around about that time. Then it went off again at 2 for 4 hours. So struggling the inverter to top up. And there's an article, I've actually got it minimized on the screen there, saying to stop public panic. They're saying it's load shedding 6, but the facts are saying it's looking like it's load shedding 8. And the situation could worsen as winter starts setting in for obvious reasons. And there's a big discussion on 702, the same subject, saying whether we like it or not. I know 100 years ago, 200 years ago, we didn't have that issue. We weren't relying on it then. But the whole function of society is reliant on electricity. And if we do get the situation, we do get this grid blackout, which a lot of guys saying, well, that's what they're showing. That could push it too much under political pressure, going that little bit too far, we get it. Where remember that you got pumps for fuel to get the food from A to B, electricity, to draw money to pay for it, you need electricity, etc. And the problem with that is when you're panicking, the guys who got to solar and inverters and off grid, who can get stuff and move around, they'll be targeted for desperados trying to get a bit of the action. There's some horrific books I've read on it, fictional, thank goodness, and what can happen if we get a total blackout in the grid. Now, it depends when that happens, the speed at which they get it up and going again. Right, when it happens, actually happened in America, but because it's basically pretty switched on, they got it up. It's still a hell of a thing. I mean, it's still a quite disaster. I'm just worrying whether they have the ability, because they have such a mess on everything here, will they have the competence and ability to get it up in a reasonable time before we have a total mass murder, anarchy, etc. I've been going on about this for the last few years, but was listening, but they seem to be listening now, not to me, but the situation. And it's bordering on disastrous. I was even thinking about potholes. They're telling you a car had actually got caught in a pothole and replaced the tire completely because it got the side was damaged, not just the bottom. So I couldn't fix it to replace. It was the best part of $3 grand I might add. And it's a situation now, they don't have the money there either to fix it. So it's going to get more and more difficult to drive around without being sweating blood. You know what I'm saying? I don't enjoy driving now because I'm totally concentrating on the next pothole sort of. On highways, not too bad to be fair. But yeah, so the Transnet still, I mean, it's just one after the other. So it's sort of start off like this, but one has to get off the chest and face up to some reality. But it all comes down to this Eskom thing. And they just don't seem to have a proper plan in place to do anything about it. It's just, instead of saying, we'll give you assistance to go and get solar heating, how many, look at the people that put $1 grand into this. If they can only put a few $100 grand into this trading thing, how the hell putting 40, 50, 60 grand upwards, even if it's subsidized at better interest rates or whatever on a monthly basis to go off grid? They're not in that position. And that's where the problems are. And there's masses and masses of people who've got those areas where they feel starve or steal. What are you going to do? Clearly. And it's sitting on a bloody tinderbox. And there's something like that fire and like the Zuma riots. And we're going to, I'm very worried. Anyway, so yeah, that I just hope to God they just don't go complete blackout. I mean, it is extreme inconvenience. We've got 12 hours a day. But we get complete blackout, then we're going to have this issue. The same Pick n Pay is costing them £500 million and 500 million rand a year in extra diesel cost, which has got to be paid for somehow, and that ends up in the consumer. And the rand taking a tumble, then it means your oil price will go up, even the oil price comes down. The extra blackouts we've had lately, look what happened to the rand, as pointed out. Look at the rands we're speaking. Yeah, look at 1877. That's electricity. Nothing much happened on the dollar. Dollar's been sideways, waiting to see, you mentioned many times. So where's that coming from? Pretty sure, I don't know 100% to be fair. I'm going to speculate, I don't know for certain. But look at that jump there. That's when I say jump, and we're talking about the daily here. Look at that lot there. That's worried about Eskom almost certainly. Okay, we can certainly look at it, Marius. I've been threatened to buy it for a while, and every time I wanted to pull back, it didn't pull back, it popped up. So I wait for it to pull back, and it didn't. So I'm getting scared of chasing it now. I'm buying the name of the game, I'm not even doubting that. But to be honest, Marius, it's getting again a bit of, maybe I'm being a chicken here, to be honest. I want to get at 150. I'll be honest, I missed it. For no other reason. It wasn't even like it's 3 o'clock in the morning. I just missed it. I'm not going to make any excuses. I missed it. And then 151, I thought, I'm not chasing, I'll wait for it to pull back. Clearly it didn't. Went for 152 and it pulled back. It didn't, but not enough, so I missed it again. Will it continue up? I'm not too sure about that. How far we got to go on that one? We can aim up there. That's pretty upside, no problem there. A few sellers are coming in. You can see the wick there, maybe a little bit clearer. The wick's coming in. It's back in the breakout of that. I'll be honest, if it does break above the 50 times 4 hour, come back and then bounces again upwards, I think that's probably a better area to trade it. You're a little bit more tigerish than I am. If you want to preempt that and go in now, I can't say you're wrong, far from it, in fact. But I think from a more conservative suggest wait for a confirmed break above that, a pull and then a bounce, that will be confirmed. Stop loss down here somewhere. I think that's probably a bit more wise, more prudent, more basic conservative. Conservative, press the wrong button and try to talk and let guys in. But I'm not against it now, but I think I might just, we were missing it and wait for a little bit more confirmation or a better price or something. Sorry about that. It's a bit chickenish, but that's what I think. Anybody want to be a bit more gung-ho on this, a bit more Rambo, a bit more of a trading marine and enter now? Or do you feel you'd like to wait a bit? If we get the risk reward, we can take it up there. It's 160 pips. We can put the stop down here. That's a bit far, maybe put it down here somewhere. You can find a risk reward, yeah. Well, if you want to take it slightly higher, that's fine. A breakout above these guys, maybe wait for that. Well, if the suggester actually is going to wait for a better price, then maybe we should stick along with that and say so. But I can still let it out, guys. You've all been trained a little bit now. You're all learning stuff. That's the idea. You'll have opinions now. So what is your opinion? Do you wait for a breakout? Do you go in now? Do you wait for a pullback? What do you think? It'll affect everything. Obviously, this is not a dollar. It's not the gold. It's not oil. It's not shares. So it'll be affected, all right, but not quite the same extent. But yeah, probably rather wait. Yeah. I'm not chucking out a trade idea out the window, but I'm going to tell you a bit of convincing theatre, to be honest. I might even cut this short. I've got to go into the office later on. We've got some do going on. I've got to be there. So so just do an hour today, depending. I don't mind going over if we've got something that's going to be achieved by it. But if it drifts on, then maybe just cut a bit short. But I'm going to take some convincing to get into any trades. Won't be setting it up. Probably nothing's going up, by the way, just so you know, tomorrow. This is taking on a bigger setup, this 2:30 data release, than I've ever seen CPI. In fact, even the non-farms has always been important, but never to this extent. This has been about the biggest weighted fundamental release. It's not just me saying Bloomberg, FXS, all the other publications, even the thing I sent out today to my QT VIP group saying it's waiting for this to come out. This is going to hopefully give us guidance. All I'm asking for, guys, in the heavens up there, not as expected. I want a bit of a, preferably better, because it's getting better for the world. And if we can profit before it goes up or down. But I prefer the dollar to weaken a bit with the CPI that's lower, because it's just getting better. We want to lower inflation. We don't want higher interest rates. It stats us all up on the bigger term, not just a trading position. So what's expected? Just give me a second as I check on my group, my economic thing. You get year on year, 5.5 is expected. Month on month is expected 0.4 on the core, and 5 and 0.4 on the general CPI. Just a quick reiteration again: the core CPI is without energy and food, or I call it F&F, fuel and food. Okay, so the CPI is with, and the core CPI is without the fuel and food. So fuel and food. Excuse me. So yeah, so just so I think you know, but just in case you don't, so there you do. Now, anyway, so there it is. So yeah, so don't start calling your brokers a couple of minutes before the release. They won't take the call. They're not being rude. They won't take it. And if they do, I would be very highly suspicious of that as a broker. Do you know what I mean? Mark put out to once. He called one of the guys who reckons he was a broker of some sort. And just before, I think it was a non-farms, the guy said, "You know, I'm busy at the moment on the road. I'll call you back later." What the guy's doing on the road at a non-farm payroll release. Well, if a guy's on the road and he's a broker, and that's on that release, I'd question that guy big time. Of course, I'm Tom Bick with absolute pleasure. Okay, stop loss. Make it too wide, so put it down there. 151.50. I've got the right mess of that, so let's try again. Let's go 151.5. Let Jose in. And then the TP, excuse me, take it to the 153.65. Make it 153.60 to cover any spread problems there. Don't guys still be in, because you're out. The reach is there on the buy, but not on the sell, because you're getting long, you're out on the bid, don't forget. So it'll be 153.60. It's good enough. Yeah. You get your risk reward, 110 rands, play safer micro. There you are. Won't forget the other one, Maris. Just do this one first, because you're getting some interest. You're getting some fish nibbling here at the bait here. Anyone want to do this? I know you just joined Josie as Maris came up as trader to buy it. For the record, I'm not going to go for it. I'm going to stay on the sidelines on it, but that doesn't mean to say that's the correct way to go. So it's your own choice, your own money. If you want to do it, fair enough. Maris likes it, and Tommy's asking about it. Hello? Hello, can I hear you say again? Hello? Okay, sorry, Grant. Yeah, it was just an inquiry to find out the value, etc., for them to sell under promptness of the service. I'm not actually ready. I don't want to waste your time to see if I'm just want to see if they're going to do what they say they're going to do. It's suspicious to me. They came back, they did the job, I got the valuation, quite happy. So I've got some idea. I might be selling the next year, but not selling right now. So don't waste your time. Thanks very much. Thanks for calling back. Cheers, mate. Bye. Yeah, okay, that's fine. I'll be doing the CPI for sure, but that's about it. But I'm just saying that doesn't stop other people. You know, the world doesn't revolve around trading room hosts. For me, I want to get everyone out of the way of thinking the trading room host has been doing it a couple of years, is going to know for sure. Clearly, we'd all be millionaires if we did. My goodness, fine. Just send you stuck at home affairs. Good luck, mate. Any government building is stuck at, you have my fullest sympathy. You know, right, play. He's a great lad. Okay, let's have a look. Just some trading idea. I'm still learning that there are going to be days when you don't trade and you have to accept that. Oh God, Marcus, I totally agree with you. I mean, it's boring. That's the problem. It's boring. That's why I go on about it. Sometimes you just got to say you're right. You know, it's like a party. Party's on Friday and it's Thursday. You know, you're in the mood on Thursday. Why can't we have the party on bloody Thursday? Why have we got to wait till tomorrow? Yeah, I get that completely. Tell you what, it's a mental thing. It's not just a financial thing. It's a mental thing. It's not to trade anything. You knew you shouldn't have gone, but you did anyway. You weakened, you went, and it didn't work out. The self-knocking is quite hectic. I've been there. I'm pretty sure you have. Why didn't I stick to my guns and not do it, sort of thing? So it's more a mental stress you put on yourself. I suffer badly with that. Why the hell did I do that? I knew better. I talked to myself. I shouldn't have done it. When we weak and bloody did it. It's come back and bitten, and now I feel I can't blame anyone but myself, and that's the worst part. Yeah. Okay. Yeah. But we'll look at them anyway. But I'm just making my case. Doesn't say I'm right or wrong. I'm just stating it because I know a lot of our guys, newer guys, might think, "Oh, Roger's got this idea. He's a trading host. Maybe we should jump in and do it." No, not necessarily. It's a discussion of trading ideas. It's not that we don't know it's going to work out or not. There's a lot of areas in the market might make it not work out. Euro JPY is the other, make it work out. We don't know that. It's just an opinion and a view. That's why we have stop loss, correct volumes, etc., to protect us if the market doesn't agree with you. I mean, you know, that's it. The market does what the market does. It ain't going to be there. I don't care what religion you are, whether you're a bad guy or a nice guy, whether you're a serial killer or a man of God. It doesn't matter. It'll do what it does. We can't control it. Okay, Euro JPY is another one that I also a buy. This is purely nothing to do with science here, Boris. I'm just wear that bloody euro at the moment. If Foundry's here, he's a shame. He's just said, good luck, mate. How boring. They're stuck there till 2. Good bloody luck, mate. I can't even work like that, but still, it's pretty awful. Not fun. Dreary. But anyway, yeah, I'm a bit wary at the moment because it's a lot of it reason. It's not because it's acting against me, but it's been rather strange. So I'm a little bit wary of this, and so I'm probably not going to go for it. But do I agree with the buy? Well, I do. Let's look at the EJS one. It's above there. How far away is it? It's only 12 pips away. EJS, I'd be more favourable than buying it otherwise. Let's have a look. Plenty upside. We'd even take it there, and we can take a downside here, even down to here. Yeah, there's a possibility of a breakup. It's sideways on the daily. I'm leaning towards agreeing with the upside, but I'm just a bit wary of the euro at the moment because it's been sort of a little bit irrational. And again, as I said before, it'll affect everything. Today's 2:30 release. So I'm going to be a little bit, again, sorry about the clap job, but I'm going to be a chicken and I'm going to stay out of it myself. But on the EJS, if anyone wants to do it, it's doable on the EJS. How do you feel about that, guys? Morning, Dirk. Oh, so by the way, just remind Mr. Pina, we're fully booked for the CPI at 2 o'clock, so I'm sorry, we won't be able to make it. But if you want to join, fortunately, there's a ticket out there. It's R1,000 a seat. So if you still want to do it, it's $1,000. Are you okay with that? I'm just teasing, mate. I know you're going to be there, hell high water. I'm only kidding. Okay, yeah, just some trading ideas to look at. Yeah, they both look pretty good. Nothing against them. This one particularly, I'm a little bit worried about because the euro has been irrational. I don't like irrationality, and as I say, so I'm going to be a bit on the sort of chicken side. This, but if anyone sees the possibility and doesn't suffer from the chicken syndrome, what do you think? Do anyone want to take it? Sorry, Anna Marie. No, it's particularly Dirk, because Dirk's done particularly well out of it. That's why I decided to tease him. If he hadn't done well, I wouldn't have joked, you know what I mean? You know, you tend to banter and tease the guys you know well and can handle it, you know what I mean? Because he I tell you what, though, this is serious now. I just remembered South Africa playing a rugby match at 2 o'clock in my local. So we might have to cancel that reason. I think you'll understand that, eh, guys? That is a good reason to cancel. What do you reckon? Hey? Hey? Since when has South Africa played at 2 o'clock on a Thursday, Wednesday afternoon? Quite sure. So that might be a slightly less skipping a beat, reliable bit of BS, but just having a bit of fun. But I think the lads there would agree that's a good enough reason. Yeah, Hillary, I know that, but we only have about 100 people supposed to go in there, so really you can't really join the CPI with such a tiny amount of money, because unfortunately it blocks people out who've got more money and won't be able to get in. However, having said that, if you get there at 2 o'clock, you might get away with it. But as I say, if it's fully booked, we had a situation. I think Montili had that problem. Was it NK? I can't remember. Had that problem. They tried to join at 20 past, and it was fully booked. They couldn't get in. So make sure you got your seat reserved because there's only a maximum of 100 so people can get in there. Just bear that in mind. But we're trying to say, Pete, don't. If you've got a couple $100, I know you want to put money later on. I know I get that, but it's such a tiny amount of money. There's not much you can do with it. You're overexposing it to the micro, and it might be someone who's got a few grand who wants to take it and he can't get in. So just use a bit of sort of consideration on that aspect. No, we won't make it either. That's the fear zone. There's actually a person talking about on MoneyWeb last night. If everyone's risk averse, but they want to make a lot of money, and she's a top lass anyway, or one of the not FNB, one of the big broker institutions or whatever, and explain what I'm trying to get across. If you're risk averse, you're in the wrong business because this is highly risky. And number two, if you're scared of losing, you obviously must be scared of winning because you won't win if you don't risk. You know what I mean? Yeah, it's entirely up to you how you do it. I mean, it's your money, your time. But I want to try and get the concept across to people with very small accounts. Like I said to the guy, about 100 Rand in there. But the advert said, I'm not saying you can't trade with it, but the effort you put in is going to be. For example, you see a job in the newspaper is offering you, let's say, 5 or 10 Rand a month. Hardly going to apply for it. But that's the sort of returns you're going to be getting and the work you've got to put in if you have a tiny amount in. Do you want to work that hard for so little? You know what I'm saying? And I don't think everyone seems to get that concept. Of course, you can trade with tiny amounts, but you're not going to win anything. It's not going to happen. You know? All right, you won't lose anything, but you won't make anything. So what's the point? Might as well go and play on a demo account, and if it gives you a bit of fun, go and do that because there's no point otherwise. You know what I mean? And it's basically a psychological thing. People want the returns, but they're scared. You know, they're scared about the risk. Unfortunately, horrible thing. It goes together, and trying to get that understood, that concept. No, we're going to do gold. We're talking about the CPI, and we're going to be doing gold this time. Discussed, I think you were there, I'm not sure. Discussed, actually, Ken brought it up, and I think it was a better idea. So we're going to do gold this time, and that's 20 Rand a micro. Great stuff in it, as long as you get the concept. I don't like what anyone does, but it's very frustrating. They're not getting the basic concept. You know what I mean? Nothing to stop anybody doing anything. It's just understand, don't expect to bloody drive at the speed of a fast car when you're in a slow car. Yeah, and this is, and that's nothing to do. There's not any intelligence like that. It's the dream without any form of reality. I'm positive I'm going to be building Rome in one day. You need a bit more than positivity to build Rome in a day. That's what I'm trying to say. Hey, you like them, Tommy. Do what you like. I'm just going to use it for the guys there. A lot of guys coming in. I've clearly come to trade, that's in the bother. But anyway, it's got a lot of guys coming in, and you've been in here a couple of times. You know, the guys have been in here. Hillary knows that. He's been on here a couple of times. You know a little bit what's going on. A lot of guys there, it's their first time. They don't understand the full strategy after a couple of explanations. Start confusing them. They can do the US dollar, yen, the euro dollar. They might do the NASDAQ. They might do Brent, but whatever. That's going to confuse the hell out of them. That's going to make more hassle for me to get it through. I'll come to that in a minute, Paul. So gold, I'm doing. The reason being, actually, it wasn't me. Quite frankly, it was Ken. Right, Ken's been around a bit, but still, we learn from each other. Is what I'm saying. I mean, you know, a guy I've never done before might come up with an idea. I think it was one dealer anyway. Wouldn't be doing it wrong. Came up with an idea about the 100-day moving average. And I thought it's not a bad idea. The guy been trading 5 minutes. Hey, let's listen to the guy. He might have something to say. Don't write the person off. Oh God, don't listen to him. He's only a private. I'm a general. No, listen to the guy. He might come up with something unthought of. I can be a bit stuck in the mud myself. We'll all be doing it for a while, you know. So yeah. So it seems to be. You know, with the euro dollar, let's put it on just think of it. What he came up, and he actually had quite a good point. This is the most traded instrument in the world by far. Euro dollar alone outstrips, this one instrument outstrips the volumes of trades in the entire world stock market to give a size of it. Talking over $1 trillion American dollars a day, just the euro dollar. So there's so much involved in it. Go into the 15 minutes. You do get movements like that, even if maybe it shoots down or whatever, argument's sake. But you suddenly get to jump up simply because that's just profit taking. I keep an eye on the DXY, and the DXY is still going in that direction. Okay, I might hold on to it, but I'm a bit more experienced. A new guy will see it doing well, just jumps up and panic, go out of it. That's just a hiccup before going down. So the gold can be a bit more steady for that reason. So it's not going to, in theory, no 100% here. The theory is a bit more steady, so you won't get those emotional takeovers of logic. They don't understand the DXY, the new guys, you know what I mean? That's just a bit of profit take, not like, oh, that's all about. All they're trying to make is a quick buck, which is at least amount of effort as possible, to be honest. And they'll just say, oh, we'll go down, I'll get out of this. And they end up taking 20, 30 pips when they could have taken 120, 30 pips. You get the idea. So the gold's a bit more steady. And last time, it might not happen this time, we got a bit more of a movement. And I'm going to be quite honest with you as well. 80 bucks a pip, we can go for 20 bucks a time. And it might give a guy to if they can do the maths on it, that is, do it. The trouble is, I know there's going to be guys put 0.01 in where there's 200 rand or 20, don't understand the difference. And if it does work out, they're only going to make a little money because they're underexposed, but can't help that. Anyway, that's the bottom line, Anna Marie. We're going to do gold today. Same sort of idea. And we do $1 above, $1 below. Okay. Okay, you need to know problem. That's great. Welcome. And so let's let this guy in. Welcome. Okay, I know you've got that. Interact. I'm glad you said you just joined. It means you're not going to sit there and hope it's going to download in your head. As simple as that. You got to interact. That's a fantastic start. Welcome. Chat line, you already realized, or unmute, etc. Just want to say this is not a training room. That's for the classes which Stock Market College do. I'm separate. I'm with Quick Trade, by the way. I am a broker. I'm licensed to advise you. They are not, but I am. But that's what you get, the license to advise situation once you've done the basics and the classes. And the trading room is to get on the practical road like a forum to put those skills into action and hone them and improve on them. That's the idea. So anybody coming in who doesn't know what a lot size is and doesn't know the difference between a share and a forex and what we're talking about, you know, is completely new to it totally, might get a little bit bewildered. But it's up to you. You're more than welcome. Straight charge, probably about messing, eh? And so that's fine. So we'll try gold. If you come with the euro dollar and you've done it before, stick with it. Some guys say like the dollar yen. Well, stick with it. Guys have done before. The only thing, if you're doing the NAS, it's different. It's a much wider spread. So you've got to have not 10 pips above or anything like that. You've got to do something like 20 pips, 5 pips. And you sometimes don't get the reaction on that. You've got to do a wider standoff on the straddle trade. So I suggest probably it's up to you what you're more comfortable you do. But I'm going to do the gold with the guys today. Dirk's done before. If you want to do with gold, great. If you want to do the euro dollar, it's knowledgeable now to make your own choice. Okay. We're having a lot of meetings now and discussions there. How we're trying to get through to our clients is this position sizing. We might be start doing workshops on Zoom for guys to try and get the position sizing correct and understanding that because of their emotional fear of putting tiny amount in, they're wasting their own time. Not being rude to them, but try and get their concept that it's their own interest. They're going to do it properly. You know what I'm saying? So we're trying to work on that because it's getting a little bit frustrating while guys are coming in putting like the price of a hamburger in a restaurant in and expect to start making some sort of return that justifies the efforts and trying to get it through to them. Well, you got to put in to get out basically. But we can probably spend some time on that because it's quite a large amount of people seem to labor on that impression, and it's usually sort of financial desperation that leads into it. And it's not helped by Instagram, where you can start trading with $10 and that. This is irresponsible, in my opinion, because you certainly can, but you're wasting your bloody time. It's like walking to Cape Town. You can do it if you like, but when are you going to get there? From Joburg, you know what I mean? Okay. Going back, somebody asked a question back there. We go back to the return. They're on. So it'll be 20 rand a micro on the gold, to reiterate that. 80 rand a micro if you're doing Forex, yeah. But make sure there's a dollar involved. Don't do the CHF JPY, make sure there's a dollar involved. And not the rand, guys, not the rand. Yeah, and I just want to reiterate that. If I lose, I won't lose a lot. That's absolutely true, but then you won't win a lot. So what's the point? You know what I mean? As long as you get that concept, you won't lose, you won't win, so what's the point? And if you think it's all a lot of fun, go to your demo and you won't lose anything. Then you're having a lot of fun there. Paul's asking about how much to make 60K. What was it now? Because I want to discuss that with people to get some reality. Don't want to spoil the dream. Get the trouble, spoil the dream. People sell on the dream. But I'm here not to sell you the dream, but try and help you to be successful through reality. Who's it now? Somebody, maybe post again. I think it was Paul or somebody. Who the hell posted? Was it Pietro? Something about 60K. Where the hell was it? Can't find it now. Or is it on the WhatsApp? Maybe privately sent to me. Oh no, it's Paul Jardine. Good to have you here, Paul. I know it's not always easy to make it. Well done. How much should you have in your account to make more or less 60K monthly? Quite simple to answer that. Okay. Right, like anything else, like if you're in sales, you know, you might make 10 sales this month, and you make like 5 the next month. So you've got to look at over a period of a year to see what your average is. You can't work it out, give up the job, you had a bad month, or you're going to make that every month you have a good one. Let some people do that. They have a great month, they go and buy a fancy motor car, and then suddenly find they're under pressure now to pay the payments on it because they're having a couple of bad months. You've got to average it out. So all I can talk about on that basis, Paul, just a second to go down to the bottom of the chat line, yeah? So, yes, he was, Paul, thanks for it. How much will be safe? Hello, so how much will be safe? There's no such thing as safe. This is a derivative, leverage, speculative, high risk, hopefully high return market. If you want to be safe, you're in the wrong business. Equity is still considered a risky. Equity is considered by a lot risky. Pension funds cannot do derivatives except for hedging purposes. They can't invest in derivatives because it's too risky. You know what I'm saying? So equity is risky. This is as high risk as it gets. So if you're extremely risk averse, you've got very little capital, you can't afford to lose, you can't really do equity. You've got to start looking at money market interest rates, maybe 5 to 6% per year, which is peanuts, but there's no risk involved. If you have no money to risk, you can't really go outside that. If you go to MoneyWeb and all these people and you say, I've got this much, I want to invest, what they can invest, they'll never mention the derivative markets, ever, 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 because the risk is too high. They'll go into sort of things like maybe a little bit in unit trusts, maybe do an endowment, some in money market rates, etc. The trouble with that is the returns are very small. Maybe some might give you 10, 12%, some might go as high as 20% a year. And the guy clutching £1,000, he's going to be 100, even on compounding, before he's going to start getting kind of return out of it. So they want to get the money in quick, but they can't afford to lose. It's a contradiction in terms. So the bottom line is, if you come into the derivatives market, it's got to be understood, you only come in with money you can afford to lose. If you can't afford to lose, you're on business. Taking that to the next step, then, you've got to say, I'm going to have to take time. It's a skill. It takes time to learn. So you've got to make the effort. If you want to spend 5 years at university to become a lawyer, spend another 5 years with learning the craft from the practical commercial world before you earn a decent salary. No, you don't. You want to earn it pretty quick, very soon, and you want the amount to earn to make all that effort worthwhile. The problem is now you get the knowledge, and then you get the right tools, you get the laptop, you get decent internet, but now you don't have the capital. So you're going to be working extremely hard. A lot of time's got to go into it. You can't just put in 5 minutes there. You've got to put a lot of time into getting the idea of it. The returns you're going to make with a tiny balance, is it going to justify it? I always say to a guy, are you willing to work for 10 rand a month? If so, I'll come work for me, I'll give you a job. No, you won't. But that's the sort of thing you'll be looking at working for if you put a small balance in. So one should be thinking, what I want to get out of it, what I want to make, and then work backwards to what balance I should need to make that kind of money. Not saying I want to put in squat and I want to get a large return. That is how the suckers lose their money. That's how they get caught. And that's how the guys at Instagram and all those guys catch you out, because they know you want something for nothing. And so they'll pretend to give you something for nothing. When does something for nothing work? When does it ever work? Let's be honest. So you've got to work out, say, what do I want? What effort I'm going to put in? What time and effort and the knowledge? What am I going to do as regards getting the right to do with that internet or laptop or whatever? And then what balance will I need to achieve that goal? And everyone's got a different goal. You know, you might say I can quite happily exist on £5 a month. But clearly, you need a less balance. If you want to get 20 grand a month, you need a bigger balance, obviously. But we forget the obvious, because our mental want, and I call it the want principle, over our mental rationality. We all want 50K a month, but we don't have the understanding what we've got to put in to get that. We all want to be surgeons. We don't want to spend 15 years of studying and going up the ranks to get to that position. We want to do it after a few days, you know what I mean? And that is really where, unfortunately, most people come back and bite. It's, only fools and horses work. So they're always looking for the shortcut. And unfortunately, the shortcut usually comes back and bites. I hope that, your name begins with you, understand that. So you've got to ask, is it Eureka? What do you want to achieve? What sort of return do you want to achieve? You've got to work it backwards, how much money you put in. If you haven't got that kind of capital you can afford to risk, then you've got to toll down the account you want and build it up, which is going to take time. I mean, you didn't build a business in 5 minutes, the old cliche building Rome in a day. You know what I'm saying? We spent some time on this because we're not going to get any trade ideas out. So if the guys are bored, traded before, fair enough. But it is a serious issue, not just in trading, but worldwide, is where the guys on the Instagram and all these things are selling something where a guy is going to get something for nothing. This pill is going to make you, if you buy the pill, it's going to make you look like a film star and make you rich, and the women are all going to run after you, and it's going to cost you 2 cents to buy the pill. No, you know what I mean? So first of all, what instrument is not as simple as that. All instruments available. If you want to start with Forex, suggest you start with the majors. But to start off, you need to go to a couple of classes first. You need to attend a couple of classes, understand the basics, lot size, the difference between a Forex and a commodity. You don't have to be an expert on just the basics. And then CFDs, the slightly different properties involved, and then understand fully how the platform works. Then you come to the trading room. I'll give you an example. You don't go to a law firm and say, give me pay me to become a lawyer and then trade me. No, they'll say, you spend money, go to university, get your legal degree, and then we'll have a look at you. You know what I mean? And then we might accept you. It's not a question, not come to the trading room saying, I don't know my elbow. I don't even know what a difference in Forex and a share is, or a CFD or what a derivative is and train you up. Well, no, because there's guys here who want to trade, and I don't mind discussing it now because it's quiet. But when there's trading going on, no. And if you don't understand it, then you get the basics. And then when you got the basics from the classes, oh, can't afford to get knowledge. Well, I can't afford to get knowledge. And my maid was quite upset. She's from Malawi. And I said, you happy in Malawi? I said, yeah. Why you come here? And she says she doesn't have a degree. Her parents couldn't afford to send her to get a degree. And they're looking for degrees to get jobs. Well, I didn't know. She told me that anyway. The point is, it cost her parents, and she was the kids, she didn't have the money, to get the money to go to university. The same thing here. You need the money for knowledge. Don't try and wing it and get something free without the knowledge, because the little you can't miss will be blown because you don't have the knowledge. You're not going to let me operate on you when I've done a 2-day first aid course and then do an operation, appendicitis operation, are you? Guys expect to have qualified with knowledge. So going back, common sense, which people don't seem to get hang of, think, what am I going to put in? I need knowledge, I need equipment, and when I've done that, what I want to attain and have the balance commensurate with it. And then you've got a chance of actually being successful. Doesn't have to be in this, it just use that thinking overall. Because the shortcut is not going to happen. It's boring, I know, but try and face up to that. Okay. We do have a 4 o'clock session there, Camilla. Okay, so that's clear for guys everywhere. Right, now I'll go back to Paul. He wants to make 60 grand a month. Well, I can only say you get good and bad, but I can just say what the pros say you should be aiming at, because when you're making the extra time and effort, which go into it, and the risk, time, effort, and risk go into it, you want a higher return than a no-brainer putting it in the bank. In a savings deposit, clearly, obviously, right? So you've got to say, what is justifiable to do that and what is likely? It's not me coming up with it. It came up with being in the business a long time, seeing what a lot of guys say and overall, etc. And they work in the region of something like about 4 to 5% per month. Okay, when you know what you're doing, not when you start, you don't know what you're doing. You're not going to get a partner's salary as a first-year lawyer. Clearly, you're just an associate to start with. You're learning your trade after going to university. But that's when you've gone through, you've got some experience, you've got a hang of it, you know what you're doing. They say when you've got it over a period, you might make 20% one month, you might lose 5% the next, but over a period, you should be looking at saying roundabout plus minus 50% per annum. Okay. Well, that's exactly mine. It is extremely frustrating. I will be careful, but it drives me insane. I'll be honest with you, mine. Yeah. They want to make a buck and they don't even go to page 1. If they want to play like Tiger Woods, they buy a book in it and they won't even go to page 1. It is very frustrating. So yeah, so we're looking at about 5% per month. We'll make it 4.5, say around a 50% per year. Okay, now 50% per year, that's a hell of a lot higher return than you get in a lot of businesses. I'm certainly okay. In fact, my brother-in-law's got his own business, quite successful. But I said, if you can get 50% a year, and he said, I'd buy your hand off. You know what I mean? I hope you all know what that means. That's, you know, it's like a dog biting your hand off to get the food. It's such a great deal. You know what I mean? So 50% a year, that's what you're aiming at. Not when you begin aiming at. So let's put that in perspective mathematically. You want to make 60 grand a month, as you mentioned, right? Well, I think it was a year or a month. Let's say it's a month. Then you multiply it by 12. 12, 6 is 72. So that's 720,000 rand a year. So to get the capital, if it's 50% a year, it's quite simple math. You just double the yearly income to get the capital required. So it's 720, then it's 1450. Say 1.5 million. Yeah, 1.5 million, divide that 2, will get you, once you know what you're doing, that kind of return. Do you get the idea now, Paul? Okay. The maths are not difficult. Conversely, if you got 500, that's 250 rand a year. Divide that by 12. What's 20? That's about 20. Is that 12? Yeah. That's 20 rand a month. That's about 1 rand a day. So the guy's now looking to make about 1 rand a day. It's a lot of work to make 1 rand a day. You get the idea. So that's why you've got to look at that sort of basic. And then you've got to have all the equipment and know what you're doing. If you don't have the right equipment, you don't have the right knowledge, well, that's not going to happen anyway. It's like everything else. Surgeon, well, it depends on how long you've been trained, where he is, and blah, blah, blah. That's the bottom line. Okay, hopefully we're clear on that. Any questions? You all got that, guys? Any questions? Remember, guys, this, by the way, what do you think? Any questions? This is a trading room. We did discuss trades that come first. Anyone comes up trade like Morris did, we look at it immediately. Never mind what I'm babbling on about. Look at it immediately. Just for the major fundamental coming out later on, doubt any trades, let the trades you're in run and take it from there. To say, yeah, so we discuss other areas to try and get to meet sort of better trading principles, get more professional in our trading. So clearly we get better at it. And I'm not, I've been in sales, so I know that, but I'm on this side of it. I'm on the assisting side. And one of the exams, like I mentioned, I had to take is on integrity, and I have to do that. And I believe in that. And number two, I can't give you a load of bump because unfortunately, the downside of being qualified, I've got an ombudsman out there you can run to. If I turn around and say what some of these sales guys are, oh, you'll make this, that, and the other, clearly it's not going to happen. You can go and report me and I'll be in trouble. You know what I mean? Because I can't make, that's the whole idea of getting exams and of one of being on integrity, so that you can have a more professional approach to it instead of making these outlandish claims, which Instagram, Facebook do. And my friends, you'd have that of the media as well. These outlandish stuff they come out with. You know what I'm saying? Why didn't I place a stop loss in this trade? Oh, this one here. Okay, sorry. No, this is the EJS one. This is an EJS one. I've got a trading stop on it. Okay, the EJS is somewhere we've evolved in the trading room. Nothing to do anywhere outside. You go to some outside, you know what you're talking about. This is something we evolved here, and it's purely on momentum strategy. Okay, well, you don't put a stop loss. You put a stop loss. You don't put a TP in. You are certain ways where you go in, and I'll show them catch it in a minute if you like. And then what you do, you can put a stop in and keep modifying, or put a trading stop. I've got a 50 pip trading stop in. So my stop would be originally 50 pips above that. It's now 50 pips above that, which is what, 60. Actually, I might change it now on that subject. Good point. Thanks for bringing it up. Right, click. This is how you change your trading. Just go to, sorry, you go to none. Now I'm out, no trading stop. You see on that one, you can see there, there's no T there. So I haven't got any more. So what I do is I right click and I replace it, and replace my trading stop now to 30 pips. Okay, just replace the 30 pips. So now my trading stop is not shown here. I know it's pretty awkward. If you want to do where you see it and modify, you can do that instead. No problem there. So it'll be now 56. Okay, 30 plus that 56. Sorry, beg your pardon. 30 plus that to be at 41. So I can still make a loss in it, but it's going to be far smaller than before. Okay, I hope that makes sense. Well spotted, by the way. I usually keep it, didn't see it completely out of the way in your spot. I usually keep the trade slightly out of the way, so not staring at that bloody thing all the time. Because you're seeing it, you're fixated on it. I've seen when I've done training with guys when I was in Botswana, all the guys that have laptop. What is the word I was saying? The sort of transfixed to the movement of the up and down. I'm suggesting try not to do that, because it'll play with your head. You know what I mean? Look at this. You're doing well. Your soul is short, doing well. Hey, this is going great. You go to the loo, come back. Now it's going up. Now it's going to play with your head. You know, the up and down, they get rid of. But if I want, I'm going to take that out. Stop it, as mentioned. How far I'm in profit? So not all very good. This one's coming right. I'm letting him run. They're up and down. What I'm going to do there is 26. Take out the trading maybe. That's only 13 pips in profit. So I'll leave the trading to start. I might put them modify. I've got the time to do it. I'm just showing the guys how it works. So yeah. Jones is doing it. The NAS is still come right. It's 50 bucks. The NAS I made a mistake on. They got on the wrong position side. That's my trouble. Put the mic. I meant to go on the normal one. So I'm underexposed on that. 10 times under bit of that. So there we are. So let him run and take it easy from that. We'll do letter one later on. Okay. What's happened to that now? Something disappeared now. Where's he gone now? Jumped down. Okay. Find later on. How do we stop that? Jumps off somewhere. Right, so let it run, don't stare at it. You can afford it. That's why you went in on that position size. You let the damn thing run. You've got your stop loss. You modify it and let the trade work out. Don't try and will it up and down. I'm not taking notice of it. Look, there's millions of people trading. They'll do their thing. Get good days, bad days. Sometimes all blue, sometimes all red. And if it's red, get stopped out one and become blue. I've a couple of times observed the stop, not quite reached, gone up and hit the TP. Whether it's the TP or not, I have no idea. But if you modify your stop, not too close, don't forget, you can also get stopped out in a profit anyway. On that mention, I won't mention the name here, but I noticed a situation, so I'm extrapolating, pick out the person involved, where I noticed, I think I can't guess who it is. They were in the AUDCHF, and I looked at the profit on it, and it was very small. They took it too quick. I'm in the AUDCHF, as you can see, and it's doing okay. That was an EJS, and it's doing okay too quickly. But the person's still in the EUR CAD, and they should have been stopped out. They might still come right, but they modified the stop away because they couldn't handle loss. Try and get over that. You've got to accept you're going to take a loss. If you start modifying the stop away, I'll be honest, you will sometimes come right. What is the situation? You make a habit of it. More times you will not. Now you're in trouble. Now you're down way above your risk on that. In other words, you're going to risk, let's say, 100 units to be round dollar, whatever. Use a round figure of 100. Now you're down 200 or 300. You're way over, and you can't handle it anymore. But you can't take it anymore. So you're hoping it's going to bounce. Now you're on emotional winging a prayer. The market doesn't care to do what it has. Now you're 400-500, and you don't know what to do now. No, rather accept the loss. Even if it bounces, you've got a stop loss. You worked out your calculated one. You can see it there. You get it from live chat, as I mentioned before, technical support. You worked it out. So I'm risking that. Be disciplined. If you stop down, it bounces. It's annoying, but so be it. Don't start modifying away and holding on to losses. And then you go into profit, quickly taking it. Trying to educate people, it's an emotional thing, and it's a guaranteed poorhouse job. You've got to run with the profits, modify, not too close psychology. Oh, it's up 30 pips. If I put it 30 pips, I'll make it 10 pips away. You're going to get stopped out. Keep it 30 pips, sometimes 40 pips, depending on the volatility, and ride it. If it's a TP, fair enough. If it's getting you a TP, the momentum's there, modify your TP. Oh, higher, aim higher. You're on a winning trade, stay on it. Maybe you modify again the stop loss, which still pulls back. You could even cut your position. You've got 10, well, bank 5 and let the other 5 run. That's the way you do it. This emotional jumping out when you made 10 rand and then holding on when you're losing 100, modifying stop loss because you don't want to lose 100. Now you're losing 150, and then your margin calls. No. Try. I noticed that this morning when I looked through various players. I think the person here knows who I mean. Try not to make a habit of it. You need to be disciplined on this. It's very important. I hope we're all on the same page here. This is a business, like any business. You need to be disciplined. You need to put the effort in. You need the right tools and the capital. It's the way it is. This is not something you win the lottery on. Okay. All good, guys. Any comments? Yes, I can indeed. With pleasure. Thank you. Pleasure. Bond treasury yields. I'll do that closely before I do that. Yeah. I'm going to do the economic calendar. A few new guys there. When I say new guys, I mean, don't know anything. Right? We're going to get some lessons. Okay. This is guys who have the lessons now want to get the backup of a couple of things. Economic calendar, we talk about fundamentals. Very important. Very important indeed. There it is. Copy, paste it. Minimize it and have it ready your laptop each morning. I get up in the morning. That's a few of them I minimize. I've got 2 screens, and that's one I have and I refer to. On my other screen, I have my charts on one screen and have the others on the other one. So I can quickly look and click on the dollar index, which I'm posting here now. Okay, that's the dollar index. I can quicken up, got it up there. Or I might want to quickly flick over to the yields. Click up there, and we're on the yields at the moment. Just post it for you. I'll explain it. Give me a moment. While I'm doing that, I just want to promise you something again. Why did I find that? Beg your pardon. just click on. Yeah. I've got the hourly, but for some reason it's on the line chart. You can change it over yourself, make it easy, and I'll post it again. One on the line chart. Sunrise. It was on the. I wanted the candle chart. Sorry, let me concentrate. Okay. Yeah. Where was I? Right. Yes. So the yields. Now the bond is where you borrow money. Okay. And you pay an interest on it. You buy a car, you put a deposit down, you pay an interest to the lender of the balance. Well, the bond is borrowing money and there's an interest payable back if you get out of it. Okay, so, right, we call that the yield. Okay, same thing. Right, now, why is the yield important? Well, all right, why specifically is this particular one important? Well, the US 10-year, we call it bond yield on there. Everyone knows the note, same thing. It's a treasury bill is the year or below. 3, 5, I think it's 10-year, 7 and 10-year. It's a medium term, they call that the note. 15, 30-year or 15, 25, 30, whatever it is called the bond. One is very long, one is medium, and one is very short term. Same principle, it's all bonds if it turns you on. Right, now it's what happens now, it's a note that's sent out with a figure on it. I explained it yesterday. It's like you got a 200 Rand note. Now, I gave you a 200 Rand note 6 or 7 years ago. You've saved it and you bring it out, you put it in front of me. It still says 200 Rand on it, doesn't it? That's clearly, are you with me? However, the purchasing power has changed. It's devalued. So even though it says 200 Rand on it, it ain't worth value 200 anymore. That's why I say we call it fiat currency devalues. Things like, shall we say, housing in good areas, not bad areas, but generally speaking, and gold tend to maintain their value. So let's say gold was, let's say, $100 ounce 30 years ago, 20 years ago, I don't know, and it's, let's say, $1,000 an ounce today. Gold hasn't gone up from 100 to 1,000. Gold is still the same. It's the currency has gone down. You need more currency to pay for it. That's the problem which people don't realize. That's led to the enormous borrowing which governments have done, sustain their welfare programs that make them very popular and get them lots of lovely votes. It's borrowed money. It's not theirs. They printed more and all they pay it back with devalued currency. That's the issue. Well, the yields that come from it go up and down, and they opposite to the bond. So if the yields go up, the value of that, it still says $1 million on the treasury bond, okay, the US 10-year note, but the value of it reduces if the yields go up and vice versa. Bottom line with all that is, how does that affect markets? Right. If you're going to put your money, not derivatives, but equity, where you buy it cash, right? You're going to buy, let's say, 10 Apple shares. When you buy 10 Apple shares, the reason why you're buying them, you've done your homework, you've got some advice on it, you think you're going to make a decent return on that, a better return than you're getting in the bank. Okay? I'll do that in a minute, Michael. You're getting in the bank, right? Are you with me? So the reason why you're taking the risk is, even if you think, I'm advising you, Apple's a great company and a lot of this, look at the management and all blah, 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 all great. There's no guarantees, you know, you're taking a risk. The reason why you're taking a risk is you want a higher return. Right. So the point is, because you're taking a risk, the opposite is you do not want to take a risk. You don't want to take a risk, you put your money in the bank. Now, if the yields go up, you're getting a higher return by taking no risk in the bank. Are you with me? So if you're getting a nice high return by taking no risk, by putting your money in the bank, why should you go and buy Apple shares or Google shares or, I don't know, Ford shares or Coca-Cola shares where you're taking a risk? Because you're getting a pretty good, nice return by not taking a risk. So if the yields go up, they'll have a negative effect on shares, and they'll have a negative effect on the indices like NASDAQ, and it'll have a negative effect on gold, because gold does not pay an interest or a dividend. So gold, you're going purely for the risk of capital gain. If the yields come down to, let's say, 0%, you're going to buy gold because you're not losing out. There's no opportunity cost. You're not lose out by going to gold. because there's no alternative. You're going to get nothing in the banks. You might as well take the sodding risk and go for gold. If you get nothing in the banks, you might as well take the risk and go for Apple or the shares. Just call them shares. You get the idea. So they work inversely proportional. So if the yields go up, excuse me, the gold will come off. In theory, nothing's 100%, remember. That's the theory, and the shares will come off. You get the idea. That's why it's important. So you're about to go into a gold right now, buy or sell. Before you jump in, it's retraced technically, it's come back to your support, it's looking like a good trade. Because I post on there, and you've been listening and you saved it, like I told you to say, well, I asked you, I suggest you save it, better way of putting it, and you check your yields to see if they're coming off or if the yields seem to be going up, going down, it confirms the gold entry, and then you look at your DXY or dollar index. That also is inversely proportional. So the dollar index is weakening and the yields are coming down. Listen, and you've got it to come back to gold support. Here's a very high probability of a trade. Not 100%, good probability. So you do your risk calculator, what you're prepared to lose, what percent your balance you're prepared to risk, lose, whatever you like to call it, and then you might go for the trade you put. Hope that's clear. I'm going to be having to leave the office, so I'm going to move on from that. Clear, Pietro. I hope everyone's clear. We'll go over it again. It'll be quiet time to go over it again. Make a note of it. Come, be professional. Come with a piece of paper. I got it once. I'd like to hear it once more, just to clarify it. We can do it again. But I just want to move on to the next question. When you're trading, you apply to all of them, 15-minute, hour, month, week, or whatever. I'm going to go to the daily because I usually do my strat. That's me on the day. I'll do 4. Yes, I'll do a bit short. We do 4 if you want, or even the week. I do the daily anyway. Now, where's the brown? There we are. Now, internationally, the most popular traded moving averages by far is the 200 and the 50 moving average. Come back to Mr. Peterson there. Right. That is the dark blue, but make it any color you like. If you like my color, fair enough. Got dark blue there, that's a 50-day simple. If it's on the hourly, it's the 50-hour simple. Not the 50-day, the 50-hour. It's 50 times the length of the candle. Go back to daily. 50-hour simple moving average, crunch it down a bit. This is the 200-day simple moving average. Very, 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 very strongly, I suggest you chart. Then, once you've done that, I like also the 10-day one. Some guys like the 11, the 20, the 15, personal choice, but it plays a big part in the EJS. I haven't got time to explain that now if you don't understand it, but you won't understand it in the trade on the 5 minutes anyway. It's an ongoing process. I'll explain it. I like it. This one, I'll be honest, I only added it a few months ago. One of the guys, one of the new guys, I can't remember who it was, came up and said, what about the 100? Not a bad idea, added it. So I quite like this one. It's a sort of an extra one I quite like, but it is not 100% necessary. I quite like it. If might as well have all 4, as long as not cluttering and overcomplicating. You don't want full of stochastics, MACDs, and Bollinger Bands and relative strengths. You can't see anything, and they're all lagging anyway. These are the most important by far. If you like the other 2, fine. So the 10 is the magenta. If it's magenta color, yeah. Dark blue is a 50. The 100 is black. 200 is brown, simple moving averages. Once you place them, you right click, you go to template, and you save the template. Then, when it comes up eventually, this hopefully in my lifetime, you put your name in there and you save it. So if you lose your charts, I'm going to lose the charts, by the way. New chart. I've lost my charts. I'm not panicking. I just go to my templates. I go down here, TR. I'm back in running. Just going to knock the trade levels off so it's not getting in the way. Doesn't matter how that. Anyway, so it's back up and running. So I want you to be doing it. Okay, so you got it back up and running. Netflix, on Netflix, what was on before? It was Eurodollar. Doesn't really matter anyway. Anyway, they work on all charts and all time zones, the 200 and the 50. Right. What do they act as? Let's just scrunch it a bit, see it more clearly. Right. If it's above the 200 and the 50, the blue and the brown line, you're in a strong zone. So you're looking to buy the pullbacks. You might be buying straight away, depending where it is, but you're looking to buy. If it's in the neutral zone between the 2, buy or sell. If it's in the sell zone or the weaker zone, you're looking to sell the rally. It's here now. Your hope's going to go up and sell it when it hits and comes off. Stop up there, sell it down. Here, buy or sell, depending. If this comes down to here and bounces, you buy it. It's now it acts as support, resistance, and a filter. Very important saving. We'll go into more detail later on. Doesn't take hours to explain. Doesn't take years of class to explain. Nice and simple, straightforward, uncluttered. And when you get a bit of experience at it, you can look at something. I'll give you an example. Just pick something arbitrarily. Your NZD. Daily chart, yes. What am I looking at? It's in the neutral zones. Come down to support. If it's in the buy zone here, I'd say, right, is it bouncing here? Do I see any wick? I look at the candle now, see any buys or sells coming in. So let's say it's come down here, it's bounced a little bit, and then I see a bit of a wick. This looks to me a buy. Just quickly checking the weekly. Ah, yes, it's looking good on the weekly. Look at the 4 hour. Yes, it's above all of them on the 4 hours. Where it is, by the way, example. Looking pretty good. I can flip through that quickly. Good idea. And then I say, right, put the stop down here, put the TP up there, and away you go. I do this every morning. Give an example. Stay in alphabetical order. A, you do can. It's not really getting going. Too much of a range trade. It's not even in the sell zone particularly. It's still ranging between the two. Leave it alone. Nothing going on there. ADCHF. Sell zone, no problem there. Starting to get going at the moment, but I quite like the Swiss franc. I like it much better than the Aussie. I'm looking to sell it. We're in the sell at the moment. Where's the stop loss? I like it. It's above and out of the way. 75 pips is handleable. TP, can we take it down there? I can get a stop loss there. I look to sell it. I will then discuss. We won't do it now, but that to me would be a sell. So I'll write that down and discuss later on. And piece of paper handy. Then I go to the next one, and so on and so on. With a bit of practice, you can do that. And I go through a whole lot of that within 5 minutes. And I might go through it again. I might do it a couple of times in case I miss something, because you forget. And then you get Mars, or you get Pietro, you get Keonis. What about the AU to NZD? Oh, shit, yeah, sorry, I missed that. Or when I looked at 6, 7 in the morning, it might have changed to 9:30 in the trading room. And yes, we've got an opportunity now. You get the idea. But with practice, you can look at the chart, and it's like looking at a headline. And that's the one to get the idea of. So all then you know your position sizing, and then you quickly look at the yields, you look at the economic calendar, any major fundamentals come out. No, it takes 2 seconds. Huh? What's the DXY doing? Not much there. Any big coming up? No, let's look at the trade. Move on. You get the idea. It sounds a lot at first, but it's a lot better than astronomical amount of complicated stuff some of these guys come up with, and mostly on lagging indicators, lagging stochastics, and all the rest of it, which tells you what's happened after event. I always use the expression, you're getting drenched because you're waiting for the barometer to tell you it's raining. Put the barometer in your pocket and look up at the heavens. Hey, it's raining. Better put your raincoat on, mate. You want to be getting in where it's like to go. I know where it's gone, and the indicator tells you where it's going. Let's have a look at an indicator at the moment. Let's look at something on the, let's get a better example of this one. It's coming off a bit now. Let's put an indicator on. Let's put relative strength. It's coming off. Well, no sodding kidding. No sodding kidding, it's coming off. Well, that's coming off. What's that telling me that ain't telling me? You get the point. And the biggest thing of all, guys, I will react that till you get this. The biggest thing of all is emotions. We have built in, since the day all animals have, including Homo sapiens, it's in our genome, it's a protective area called fear. And it takes over our rationality. That's where panic comes from. And that's the thing. That's why once you know how to operate the platform, leave the demo alone. Try trend the demo is worse than useless. Because if you take the fear out of it, you learn nothing. I mean that. I've been there, I know. I learned nothing when I was on the demo. You've got to go real. If you're frightened, going small, you can afford. The only way you learn. You take the fear factor out of trading, you're taking 70 to 75% of trading expertise out. Other stuff we can teach you. The fear is something, the discipline you've got to overcome. That is by far. Anna Maria, am I right on this one? Dirk, am I right? The guys who traded before. Brian, you've been done it all the times. Am I right? It's the fear. Why we do those things. It's not to do with the markets, the signals, the training. It's not my polish quick trade. It's our own fear. We take profits too quick. We hold on to losses we shouldn't. We go in the wrong. Those are all emotional stuff. That's the discipline we have to conquer. Not conquer, that's a big word, but at least start to try a little bit of control, because that's where it's at. That's why people screw up in the markets. Not a lack of knowledge, lack of intelligence, lack of that, this, or the other, because they haven't on top of the concept of how that emotion plays, have it with a cranial. Make sense? That is probably the best sort of chit chat I can give you on that subject. What do you think, Anna Marie? Do you think the mistakes you made, you've been doing this couple of months or so, have normally been on the emotional side, even though you know what's going on? Dirk, Brian, the guys who traded before, not picking on anyone, I'm just saying, the guys who traded, Coyote, Pietro, you get Michael, you get the idea. What do you think? Feedback, unmute if you like, or what do you think? I'm sorry, Paul, something for nothing. Everyone says, I want to give me a job up here, it's boring, this is great fun. I work 30 grand a month. You haven't got the capital, and they get fed up. So go to some companies, no problem at all, do with that capital, because they want your business, and then of course you don't come to the party, and then you're fed up.
Roger, Pietro, yeah. Just to let you know, yes, I agree with you. If you trade on a demo, as you say, the fear is taken out. I know from my own experience, because I've blown my account once or twice already before, or way back, and I didn't want to trade again for a long time because it's a hair-raising experience. And only recently I just got back into it, and I've been trading with the demo for a while, as you know, and now I've funded my account, and it's a big change. It is a big change.
Massive change.
It is a huge change.
Massive change, Pietro. Thank you for that backup. I want to hear, because that's practical experience, not me talking here. People talk, you know what I'm saying? If I advise you to go to that restaurant, not so good, but if your mate's been there, say it's fabulous, it's a better referral, you get my point. So here's a classic example of there. And he's telling the truth, because I know that, because I just know that, okay, just trust me, I know that. So yeah, so now he's doing it, and his mind's completely different. So that's the point. And Marnie, if you don't mind, I'm bringing it's a very good example, but Marnie is a qualified engineer, I'm a mechanical farmer, rightly. That takes discipline, getting a degree, a mathematical brain, all that's involved. And Marnie has put her hand up, virtually anyway, you know, and said it's the biggest enemy. If actually an engineer can do that as an accountant, you know what I mean? That means it applies to all of us. I don't care if you're an actuary or you're an artist, it applies to all of us. That is a discipline one has to. And you never get over it. I remember so many years, but you will get better. And the easiest way to get better is to understand it. Take a look at yourself and say, yeah, am I acting rational or am I being emotional? Finds a great company in here because he's a scientist and he will come up with reasons. Why is the euro doing that? I'm going to be honest with you guys. I don't know, but I'm guessing with the enormous multi-million dollar retail market out there, a large of those movements are not rational. It's because emotional amateur players who are new to the game, but collective, not individually, but collectively, they're in charge of a lot of funds. You know what I'm saying? One guy with 1,000 won't make any effect. You've got a million guys with 1,000. Now we're talking a billion. That's a different ballgame. But you've got a million people trading on purely emotion. It'll affect a lot of your rationality in the market. That's one of the problems of retail trading. Well, there you are, Dirk, exactly. Now, I'm going to pick on Pietro again, because I think you remember you said you're in a state agent, or were in a state, I don't know. Now, my sister, correct, fine, my sister was, and I know a few people involved in it. Now, there's a classic example of emotions, if ever there was one. Not the commercial property, she did lackly commercial property, then we'll look at the balance sheet, etc., the figures. You know what I mean? I don't care if it's in deep sleuth, regarding the figures, I'm getting it. I don't care if it's a morning sign, it's not getting the figures, I'm not getting it, get the idea. When you deal with it, man in the street, person in the street, you're dealing all the time with emotion. Now, Pietro, guarantee, I don't disagree with them on that. And that when you're doing that, they come there by that purchase. You can tell them all about how the brick's been laid properly and what foundation's been laid with this particular type of cement. You're going to bore them shitless, to be honest. I'm using that on purpose, shitless. They're going to do it because they're seeing themselves on an emotional basis. It's all emotion. Same thing with here. We're emotional creatures. We are not logical. Always, anything you buy is bought emotionally and justified afterwards logically. If you just bought that thing and I say it's not very good, you'll defend that product. If 5 minutes before you're about to buy it, and I say it's not very good, I guarantee you will not buy that product. You know what I'm saying? We always defend ourselves emotionally, and that's how it all works. Once we get these concepts through, if your sales can improve your sales, Martin, teach you all these things about being positive, learning closing techniques, is getting the concept of how the emotional mind works. Okay, and this is no different from this. Very, very much so. That's why you get reasonably intelligent people saying, I'm putting in 5 grand and I want to make 100 grand a day. I don't spoil their dream, but you're not going to make 100 grand a day on a consistent basis, because 100 grand a day is 2,000 rand a month. That's 40% a month. That's 480% a year. Do you think that's possible? You get the idea. It's because it's, again, the emotional aspect. We don't want to spoil the dream, but if you want to attain the dream, you've got to have, unfortunately, a bit of reality. And that's what I'm trying to get across. That's another beautiful story. I'm going to repeat that. I have found peace in my trades when I accept the outcome of the trade. That should be pasted on every trader's bloody wall. What a brilliant way of putting it. Which I thought that. That's Shakespearean, my friend. I have found peace in my trades when I accept the outcome of the trade. That is it in a nutshell. I've waffled on the last half hour. That said it in 2 seconds. That's it. You're going to go into the AD, NZD, you put up the calculator, you worked it out. I can afford to risk, I don't know, 500 grand on that trade. Got my stop loss protecting the TP. That's fine. If worst come worst, 500, I can handle that. I'll go on. I can hide my trades. Panic situation. Okay, right. Now, have a look at it maybe an hour or two's time. I'm doing okay. I'll modify. Now my risk is 300. Well, I can handle 500. Sure as hell I can handle 300. And then after a while, hang on, it's 40, 50 pips in profit. I think I'll bung it into 10 pips in profit, including costs. Now, if I make 100 rand, if I lose, I can't lose anything. You get the idea. I have found peace with that trade where I can set the outcome of the trade. Absolutely spot on. Give up this, mate. Go into poetry, my friend. You make millions. And sometimes as well, you've got to accept the loss. You made a loss, you're going to make a win. No, you might make 3, 4. It's not unlikely to make 10. It's a different get 10 losses, get 10 wins. You know what I mean? If I say go to the casino and I want you to lose in every single spin, it's just as difficult winning on every single spin. Just by sheer bad luck, you're going to win one of them. If I'm going to give you $1 million to lose on all of them, you get the point. So when anyone says every trade's a loser, I guarantee the guy who's trading will make use of those signals. It's impossible to lose in every one, because it's like impossible to go to the casino, not impossible. But the odds again is horrendous. To win everyone is like to lose. You go on red, the next 50 spins, it's very not impossible, very unlikely. Blacks will come up sometime, or vice. You get the idea. And percentage is very important, Pete. You've got to work on percentages. It's no good saying, hey, man, anyway, under round, that's no good. If you've got $1,000 in your account, that's 10%. How long did you do it? Well, it took me a week. That's a week. That's 50 weeks a year. That's 500% a year. If you make 500% a year, you'll be a rich man for a couple of years. You get the point. The amount is meaningless. Now, unfortunately, Anna Marie's highly fed up, because I'm not allowed to tell her, I'm going to tell you anyway. She's got $1 million in her account. Sorry, Anna Marie, the truth is out. Anna Marie's got $1 million in her account, and she only made 10 grand this last week. She's fed up, because that's only 1%. So Pete he's only got $1 grand. I know what I'm just pretend. Pete's got $1 grand in his account. He made 100 rand. He's in a much better mood than Anna Marie, who only made 10,000. Anna Marie made 1% and Pete made 10%. I'm joking, Anna Marie. What she's got, I can't tell you. I'm really kidding. And she knows I'm teasing. You know what I mean? I'm trying to bring a bit of fun into it to get the concept of what I'm on about. And then you'll see it more clearly. Okay. Because then you will be successful. If you go and you want to buy a book in the woods, and you want to get his income without even picking up the book, you might get lucky, but the chances are against it. If you find these chit-chats useful and quite a time for trading, I repeat them, because I think all the lessons these guys are getting, they're coming in here. They're not getting these basics. And I think these psychological aspects are critical for success down the line, not just in trading, but generally speaking. I watch a lot of stuff in YouTube. You've probably heard of Jordan Peterson company. He's a, what do you call it, psychologist, professor Nochal, and these guys. Once a bit of experience and think of it, 90% of what they're saying, despite all their degrees and all the rest of it and experiences, is actually common sense. The reason why I have to listen to all these rah-rah guys is we're not using common sense and we're not thinking. Once you start thinking, use a bit of common sense, 9% of what's said out there and all these rah-rahs and all these guys, hang on a minute, I'm serious, I mean this. I listen to a few of them, I think, hang on, that's just bloody common sense. You know what I mean? But we're so focused on what we want, not what we want to give to what we want. You know what I'm saying? And it's always a good idea, because where you learn is when you lose, absolutely. Unfortunately, you don't learn how a lot we win. We're too busy celebrating, I suppose. But unfortunately, when you do lose, why? And then you've got to say, why am I losing? And sometimes, not always, but sometimes it's not your sodding fault. Remember, we discussed ad nauseum with Farley there about the euro. I still don't bloody well know. In fact, I know for a fact a couple of analysts out there who've got more, you know, more sort of, what I'm looking for more details. When you've got, can't be the right word. Also not sure. Sometimes the market behaves strangely. This is not fact, it's just my supposition. It's because the recent, since COVID, enormous increase of the retail market, I think it's a big contributing factor. They didn't really count in the past because there weren't enough of them with all institutions. There's so many millions of them now, they count. But unfortunately, most of them are, quite frankly, amateurs and they're acting on their emotion. And sometimes they'll say, and they go the wrong way, which means it makes it the right way. You know what I mean? It might be a brilliant trade to buy it. If enough of the guys emotionally go and sell it, it'll force the price down anyway. Sheer volumes involved. And that might have something to do with it. But yeah. Well, this is it. That's why I have a calculator. If somebody says to me, hey, that AUDNZD really beat me up last time. I just went in there, I can't, that really suffered big time on it. My first thing is, then you're overexposed. You went in too big. Another one is where people say, I haven't got much money and I can't enter trades, I'll go, instead of 100, I'll go to 500 on leverage. All you're doing is reducing the deposit. So then again, you increase your overexposure. What's going to happen? Well, you have something wonderful called margin call. Thank goodness we have the margin call. So we didn't, you'd end up owing the company money because you'd lose more than you put in. Because remember, you're putting your deposit down. I hope we all realize this. Margin call saves your bacon. You buy a £1 million house and it's in a 500 to 1 leverage. That means it's £2,000 deposit. Let's say the housing area you bought in, that £1 million housing area, squatters have moved in. It brought the house value down from £1 million to 900,000. Bang, quickly. Not only lost your £2,000, you'll owe 98,000 rand. If you've got to mortgage your house or do something to bring up the money, that's the problem. You've only put in, you're bound to £2,000, but you now owe 98 grand because the derivative instruments come down by 10% to 100 grand. You're so over leveraged. Luckily, thank God, the margin call rescue, so you're knocked out before you owe. So that's a good thing in a way, but people don't understand it. They don't even understand your leverages. That's why we need to understand these things. Nothing wrong with a fast car, nothing wrong with a Lambo. If you think you're in a little 10k per hour broken down bicycle, and in fact you're driving 180, and you get smacked, it's a different ballgame. Absolutely. Thank you, Dirk. You understand that. And one of the hassles I get is the education level of some of them that's so low to not understand the basic arithmetic, never mind the other bits and pieces. And it's very frustrating. I mean, if I say it's 80 rand per 0.01, and they got, let's say, £4,000 in their account, they'll put in 0.01 and ask why. You know, it couldn't work out. With £4,000, I'm maybe willing to risk, let's say, 250. 250 is 3 times to go 0.03. You can't do that. And I think, well, hang on, if you can't do 5-year-old arithmetic, how the hell are you going to do this? The dollar rand doesn't make any difference. There's another thing about dollars. I mean, it's got this sexy thing called dollars. If you're earning $100 a month or 1,800 rand a month, it's the same bloody thing. Doesn't matter dollar rand. Oh, I'm earning dollars. Well, if you're earning $1 a month, I'd rather earn rands. I'm earning 50,000 rand a month. Clearly, it doesn't make any difference. It's personally up to you. It's your emotion. It's up to you. The only thing with the dollar account in South Africa, you are risking exchange rate difference. You might exchange your rand to dollars when it's 19, and then when you want to withdraw funds, it's 18. You're going to lose out the dollars. So take exchange rate difference. If you're living overseas, it's a different story. If you're living in South Africa and you've got a dollar account, it might favor you, it might not. So you're not just dealing with the AUD NZD, for example. You're dealing with exchange rate risk on the dollar rand. That's the only thing. It's up to you. That's, you must do that. You must do that. I thought everyone realized that. That's absolutely, you must do that. Never mind the bloody TP, as long as your risks are audited, don't worry about it. Once I've worked out my risk, don't get a continental where the TP is. I'll play around that. I might be out long before it gets there. I might modify it. All I want to know is when I go in, I'm prepared to risk 2 grand. I'll tell you right, I'm prepared to risk 2 grand. So that's why I work it out. Simple as that. Okay, I don't modify my stop away, only towards it. Worst comes to worst, 2 grand on that trade. Okay, if it goes in my favor, maybe might have 3 or 4, so you're going to prepare to risk 8 or 10 if you're going for 5 trades. It's 2 grand per trade, or whatever it is. I'm just giving you my figure. Right, it's 2 grand per trade. You with me? Then that's the worst. But if it's going well, I might start modifying. Now I'm risking 1,500. You get the idea. Makes sense? And if I lose 2 grand, it's within scope of my balance. It's 2%. Okay, I can handle it. So fair enough. So therefore I'm okay. So I don't have to stare at the thing all the time. I've written it off before it happens. Absolutely. You work out the downside, and that your head is correct. Yeah, absolutely. If you concentrate what you want to make, you're fixated on that. Often it comes back and bites. It's like the rich guy goes to the casino and he doesn't need the money, he tends to win. You're desperate to pay the rent, you tend to lose. Murphy's Law. Anyway, I've got to shoot off now. A little bit longer than I expected because I've got to the office, but I hoped it was useful to you guys. Stick with us, learn stuff. This is not negative. It's trying to get you to achieve your dreams and goals and make it likely that you will do it. If you come in with 100 rand, no knowledge, experience, be driving the Ferrari like you saw Instagram next week, you get it. Not 100%, but more than likely end up disappointed. I can't say 100% because some guys actually do win the lottery, but the odds are against it. So we'd rather do it on a more realistic basis and get these concepts through. And it doesn't take great intelligence. It's just to be aware of it and discipline working on it. I don't think I've got to go and take another bloody course or get a degree in it. No, work on those. Probably far better the guys got 6 degrees because they haven't worked on those psychological aspects. Okay. Yeah, thank you, Tuzo. Okay, guys, I've got to shoot off. So I've got to the office and I've got to be back at 2 o'clock. I'm going to get stressed. So see you guys at 2. Must shoot. Thanks very much indeed. As long as you got benefits to me. Cheers, guys.